In the 1950s, people living in the United States had one thing on their mind: achieving the American dream. This meant dreaming big, being successful in your career, and, of course, raising your family in a mid-sized house with a white picket fence. This higher demand for houses meant charging more, which eventually led people to seek help to purchase a home. Starting in the mid-1980s, the mortgage market started to explode. Banks would give money to borrowers, and the new homeowner would eventually pay back the money over a set amount of time. This, however, is not quite as simple as it sounds, because in between the banker and the borrower were a whole array of middlemen who are only in it for the business. We'll get back to these guys later, but now let's look at two different cases of people interested in getting a mortgage. So let's say it's 1994, the height of the mortgage market. This is Jonathan. He's 32 years old and owns a successful computer repair shop in Tempe, Arizona. Jonathan's business is going well, so he decides that now could be a time to move in his new family out of his apartment and into a real house. Of course, like a majority of homeowners, he's going to need a mortgage to purchase his dream house. John makes an appointment with a broker from his bank, and after hours of going over his financial, occupational, and credit records, he's approved for a mortgage with a standard payback period. As you thought, he's able to pay back his mortgage even early with the lovely technical mess of smartphones, and his experience was overall good with the bank. So let's take a look at our next guy. This is Cameron. He's 23 years old and works a part-time job at McDonald's and occasionally gigs with his Kiss revival band at the local bar. He, like Jonathan, is also pursuing the American dream and wants to buy a house. He goes into a bank, and they almost laugh in his face when he says that he wants to take out a mortgage. Confused and distraught, Cam starts the walk back to his apartment and sees an advertisement for 1-800-LOAN-NOW. He calls and is immediately faxed over papers to sign, approving him a loan for $300,000. He didn't even have to tell him how much he made last year. So happy in his new house, Cam is having more and more trouble paying every month, especially since the rates and fees seem extremely high and getting higher. After a year and a half, Cameron stops paying, and 3 months later, 1-800-LOAN-NOW forecloses his house and puts Cam into bankruptcy. So why are these two cases so different? I mean, both of these guys were approved for a mortgage, so why were their experiences so unequal? The problem is that John and Cam got approved for a mortgage through two very different types of middlemen, or subprime companies. Now let's see what makes these two guys so different. The first company we see is Countrywide. Countrywide was started by the enthusiastic businessman Angelo Mazzillo in 1969, and their name described their entire motto. Mazzillo dreamed that someday his little mortgage company, started with David Loeb, could spread countrywide. And they achieved just that. Mazzillo had always only authorized good, clean mortgages. That meant loaning to people who could pay back the money in the standard 30-year plan without a problem, people like John. Through the height of the market, they stuck to their guns, making safe loans, and even helped invent refinancing, which essentially lowers your loan interest rates in return for making bigger payments on your house. When mortgage-backed securities became a thing, they were safely selling to Fannie Mae, and by 1992, they became the largest originator of single-family mortgages in the United States. In fact, by 2003, Countrywide stock had grown 23,000% since their humble origin in 1969. So when Johnny took out his mortgage in 1994, it seemed to be in pretty good hands. Now, who were the guys that gave Cam his mortgage? This shifty, fee-riddled mortgage was traced back to another subprime company called AmeriQuest. The guys that authorized his mortgage are what we usually stereotypically think of as the slimy mortgage broker character. So in the mid-1980s, a large group of businessmen figured out that they could sell mortgages to people who really couldn't afford to pay them back, and it still looked really good with the government because they were supporting the American dream. One of these guys was named Roland Arnell. Arnell started Long Beach Savings and Loan in 1979, and it too grew to be a gigantic player in the financial market. They let absolutely anybody receive a loan. No job? Here's a loan. No bank account? Here's a loan. No pulse? Here's a loan. On top of that, they were catering to a sector of people that were very unrepresented in the financial world. They also created creative loan packages that included hidden interest hikes and extra fees. So Long Beach Savings and Loan, now called AmeriQuest, didn't care if you couldn't finish paying your mortgage because they could just repossess your house and be able to sell it to the next schmuck that came along looking to fulfill his dream. The sad thing is that this type of market worked in the United States. In fact, it thrived. In 10 years, AmeriQuest had become one of the largest mortgage companies in the nation. They too were selling mortgage-backed securities, but unlike Countrywide, they were selling right back into Wall Street. By 2004, Arnal was making quintuple Mozilla was making and dominating the financial housing market. The entire subprime method was unstoppable, or so it seemed in 2004. Did John or Cam really know that all of this was happening with their mortgages just out of their control? Probably not. One thing can be sure, however, all of these components were critical to the events that were soon to come.